Now we're going to look at a high time frame continuation trade, and this is a Euro USD short position. So as usual, we want to start on higher time frames. We're going to start on the weekly for this example to get an overall feel for what the market is doing. On the weekly chart here, we can see that Euro USD is within this large range, but what we've done is come up and fill all of this imbalance here. We traded into this supply zone, as you can see over here, and then we started selling off. And that is when we saw this uptrend, higher high, higher low, higher high, higher low, higher high, shift into a downtrend. Well, we first had another higher low, but that was followed by a lower high, a lower low, a lower high, and then a new lower low. Now what we can see here is that price is approaching this weekly demand area, and we've seen this large wick come up as well, so that shows there's some buying pressure within here. But we're only just entering the zone. So if we go down to this price area here and refine, we may see that there is still some price gaps left open that we could trade into. If we saw that a price gap had been traded into, what we could do, if we saw that all the price gaps were filled, what we could do is actually look for a buy execution if the trend at the current prices shifted over. But if we do see that there's imbalanced space left open, what we could then do is look to finish the movement off and trade into there. So looking in the lows of this movement, I can see here that there is one very clearly imbalanced price zone. If we look at the structure here, we had a higher high, came down, retested, higher high, came down, retested, higher high, but we didn't actually come down and retest this. So this is an inefficient area, an imbalanced price zone. So if we grab our parallel channel tool, mark on the high across there to the low of that zone, we could then scale back to where price currently is. And now we have a clear zone to work with. So looking at current market price, then we can see here we have lower lows, lower highs, lower low, lower high, lower low. Lower high is now coming in. And we can see here that if we scale to the 1 hour time frame, for example, we have a structure low in here. So we had a lower low, lower high, and that has been broken through. So this is actually an area where structure has broken to continue the trend. Now, obviously, we also have an imbalance above, so what we could do is also mark off these regions and consider if price pushes this far, we may be looking at a short from up there instead of currently where we are. So we never want to block out logical thinking. If there is an imbalance above like so, we should consider this. But alternatively, we can still work with the current structure at hand. So, knowing that we could potentially look for a short then, we want to consider where are the areas that really made this drive down and where is price now approaching. If we start to look from the top, we can see the first supply zone is this blue candle here. We have a sell-off, a pullback, and a retest. Then we have this supply area. We have a sell-off, a pullback, and a retest. Then we have this supply area, and we have a sell-off, but so far we have not had a pullback and a retest. So this is an imbalance. What we could do then is mark off this supply area, see how price is trading around it now, and this would be our high probability short area because all the pricing before that is efficient below that obviously large imbalance that we have up here. So now we can consider if price reverses in this area and gives us bearish confirmation, we could definitely look for a short down and we could target that area that we want to see price move into before the large reversal comes underway. So we'd be looking for a movement like this to then come into there and potentially make a move up. So if we quickly drop to the 30-minute time frame, see if the zone needs refining any further. Now I can see here the zone does not really need refining. We can see actually that even moving to the 30-minute this by moving to the low time frame, I can see the 30-minute shows exactly the same picture as the 1 hour. So I'm not actually going to drop the time frame any lower than this. What I will look to do is see if we reverse within this region, then we can actually look for the confirmation and the entry. So for this, I usually like the 15 and 30 minutes as we've spoken about. If we watch the 15-minute, what we would be looking for is some form of structure low to form and then a breakdown. Now we have kind of seen a structure low come in here. If we could get a breakdown of this, we could then look potentially towards this area, for example, for a short, being the zone that leads to the break of structure. But we'll have to see. Okay, indeed here we have had a sell-off. We could look towards this area because as I mentioned, that pricing is now efficient, right? The supply zone here, we had the sell-off, pullback, retest. So this is the area we'd like to look for. If we go to the 30-minute, we could enlarge on that just to make sure we aren't being too picky. With high time frame trades, it's good to have a higher time frame view of what is happening, and then we can work with that. So allowing the structure to form, we are getting quite a large sell-off here. If we move to the 15-minute now to monitor structure, we can see that we have indeed had this little zone come down, form a lower low, lower high, sell-off, lower low, lower high, sell-off. So this area is the most recent break of structure, and with this we could actually focus on this supply zone here, which is going to be the zone that broke structure and is currently an imbalanced supply zone as well. So because we're working on the 15-minute or above, if we want to go for an entry, we could happily use the midpoint of the zone for our entry. That's going to get us better risk reward. We could also enter on the bottom. That's going to get us better risk reward, but we could also enter at the bottom with a larger stop loss. That's going to give us slightly lower risk reward, but still very large. Now we do have a massive extended target on this trade, a ridiculous extended target all the way to 47R. So obviously, if you're holding for a very long time, you could do this target. If you're not, you could actually look towards taking the profits earlier at some of these lows, still looking a 1 to 10, 1 to 15 or something like that. But the full potential leads into a 1 to 47R trade, so 47 times your risk. Now, obviously, we do have imbalance above into this zone. We also have got another imbalance leading into this zone. But the way we'll work with this is obviously to go with the risk reward position and not actually just extend this. That would be pretty silly. But what we can do is actually go with the position. If it gets stopped out, then we can look towards the next zones and potentially look for some low time frame confirmations in there on even lower time frames like the 10 and 5 minute. But if we just let price play out, let's see what we get. So we have a tap there into the zone. A little bit of a sell-off, so we may actually have to look for a later entry now. We are pulling back up though. Let's see if the midpoint will get retested. The midpoint there has been tapped. And now what we can do is hold the trade. Now, until we break the low, we're still riding break even. This is the break even point, remember, being the lower low. If we break that through and make a new lower low, we can then shift stops to break even, like so. So now stops, roll to break even, so we have no risk on the position, and then we can just follow the structure down. So I'm going to shift over to the hourly time frame now and just let that play out because we do have a large trade on our hands. And then when this trade has played out, so at this point, by the way, you would then shift your stops to here because we've come down, form a lower low, lower high, and now we're coming in, we'll either form a lower low or we'll come up and stop the trade out around here for probably around 15R. And as we can see, the target has been fulfilled, and this was actually a very quick trade compared to what you may be looking at generally for a trade of this size. So this was with a very tight stop. We actually managed to get into a position like this with a 2.6 pip stop, and the target is 122 pips. So this was a very large position, and that is a perfect example of how refining zones can help you get really, really good entries for large time frame positions. Let's have a look how long this trade took. This was a 3 days and 8 hours trade. So as you can imagine, that is going to be, 72 plus hours, around 80 hours actually, for this trade to play out, as opposed to the 1 hour or 15 minutes or 30 minutes that were in the intraday moves that we're going to learn about soon. So you do have to have patience to hold these trades out. Now, it's very viable as well that you would take the profits early, potentially targeting this low, or even potentially targeting some of these areas. But the potential is there to swing these moves out. I mean, this is only 122 pips, which isn't a huge, monstrous trade. It's just that we managed to get in with a very tight stop that makes the risk reward so insane on these kind of trades. So that is an example of a continuation trade on the high time frames. As you can see from the previous two videos, the reversal trades take place at the top of trends and continuations take place within. The best way to be safe with continuation trades is to follow a process of waiting for confirmations. You could have also used this zone with a risk entry like this, and this would have worked out well as well. But because this is going to lead to more losses, if you do prefer to use the confirmation approach, that is how we are going to get those scaled in entries like this, where we are in tune with the market direction. Of course, this is valid, and you would get a high risk reward of around 1 to 12 out of this. This is more so if you are working or you do not have as much active chart time. But if you do have active chart time, working around these areas here can be very, very beneficial. And as you can see, this is a 6 a.m. or 7 a.m. execution on this position. So an early London session execution following on from some of your high time frame analysis, which would have brought you a massive, unfathomable risk reward. So I hope this video has been beneficial, and we are about to move on to the low time frame work. So I'll see you in the next video.